There's been musings out there about a tightness or a growing shortage of gold that can actually be delivered.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue on into 2020. Seeing some interesting activity in the gold and silver markets already, and have been reading some very interesting pieces on investment research dynamics, which of course is the home of Dave Kranzler, who you can see over there. So real quick before we get started, go ahead and hit that subscribe button so you can stay posted on the good stuff that Dave is covering and is kind enough to join me on the show to discuss. With that said, good morning, Dave. How are you today, my friend?
Doing fine. How about you?
I'm doing well, although I guess I have a little bit of a bone to pick with you. Over Christmas week, I'm visiting my mom. We're getting ready to do a meditation at a salt cave. And then you post this article saying gold may be on the cusp of a big upward price reset. From what I'm hearing, a shortage of physically deliverable gold is developing in London. Now, come on, buddy. You know I'm not going to let you come on here without giving me some more scoop on that. So certainly interesting dynamics, and maybe you could take it from there.
You were meditating in a salt cave?
Yeah, man, for us non-financial geniuses, we got to get a little zen, some intuition
You
in
went to
here.
Wharton.
So,
You're not a vegan, are you?
no, I had a chicken fried steak for breakfast today.
Nice.
I want you to
Sounds like
still
it
think
needed
I'm
some
manly
bacon.
over here and not too far down the path. Although it was hard to stay focused with that one, and I've been curious to hear what you're seeing.
Well, first off, I just have to get this off my chest because I wake up this morning and there's this zero hedge post talking about the repos. I had kind of fallen off of checking it every day because it got kind of boring to watch toward the end of December. And apparently, the overnight repo operation was oversubscribed, indicating that there's, the liquidity squeeze in the banking system is back, which is remarkable considering the Fed right now, or I believe maybe by the end of this week, will have put about $500 billion of liquidity into the banking system since September. Not cumulative, but at any given point in time, right now there'll be $500 billion of liquidity in the system. And also, apparently, in the minutes to the last FOMC meeting, they are now talking about continuing the repo, not QE into April. So, part of the rationalization or justification for it was, well, corporations have to pay their taxes in April, so there's going to be a liquidity squeeze. Why is this the first year in history where, we're seeing a potential liquidity squeeze from corporate tax payments? Corporations pay their taxes quarterly. So, I mean, even the dog ate my homework excuse laughs at the Fed's excuse. At any rate, I make no mistake about it. Again, people only talk about, what technically is going on and why the repo system's getting jammed up. It's sort of a surface level explanation. Great, you plant a seed and a plant grows. But what's going on underneath? And the banking system is melting down. The assets of these banks, especially the high risk assets, derivatives, CLO positions, leveraged loans. Leveraged loans get ignored, but banks are sitting on a lot of leveraged loans, et cetera. Subprime consumer debt, all that stuff starting to melt down. And that's what's causing the liquidity problem. This repo operation is a de facto bank bailout, period.
Yep.
At any rate, let's move on to gold and silver, your favorite topic. So, well, there's been musings out there or rumors, whatever, about a growing liquidity squeeze, or not liquidity squeeze, a tightness or a growing shortage of gold that can actually be delivered to people who want delivery of physical gold and in their possession, not kept in a COMEX vault or LBMA bullion bank vault, because you keep it in one of those two places and you're not really sure if your gold's in there or not.
Right.
But so at any rate, I mean, there's a lot of indications out there of that. To me, the way I see this, you look at what gold's been doing, and every smack attack now since probably the middle of the summer has been repudiated, and it bounces very quickly.
Yep.
And the open interest, it keeps. I didn't check it this morning, but as of yesterday, which would have been as of Friday, it was close to 800 million. Well, 800,000 contracts, which is 80 million ounces of paper gold.
Yep.
And the rapid rise in the COMEX gold open interest, gold futures open interest, to me is direct evidence that the banks are losing their ability to control the price of gold using derivative gold, paper gold, futures, LBMA forwards, OTC derivatives. Because I've never seen, there's never ever been a rise like this in the open interest in gold contracts, and especially relative to the amount of gold that is reported to be in COMEX vaults. So that's one indication that the physical market's getting tight. There has to be some type of market force that's been driving the price of gold higher, and not just speculators running up the price on the COMEX, because the banks have been printing all the contracts that these speculators would want, hedge funds and speculative day traders. So, and the second thing I've been hearing about is real growing shortage of physical gold in London. And Ronan Manley actually wrote an excellent piece that people should read if they haven't, on Bullion Star. LBMA claims record amount of gold in London vaults, and he goes on to explain why that number is total BS. And the bottom line on this is that, and I think his calculations are probably 99% good. In other words, extremely accurate. And what he's come up with is about 1,173 tons of physical gold held in LBMA commercial vaults that's not connected to ETFs or outside owners. That would basically be gold available to support the LBMA forward clearing operations. And you contrast that with, it just kind of goes to show what a Ponzi scheme the LBMA is becoming. By mid-December, LBMA forwards. Now these are the LBMA is supposedly the most physical gold market in the world. But here you have 5,000 tons worth of LBMA forwards being cleared every week, supported by 1,100 tons of gold. So essentially, you've got, again, like with the COMEX, the ratio of paper derivatives that's being traded and cleared on the LBMA every week is just many multiples of the amount of underlying gold that, at least by Ronan's calculations, are free and clear to settle under those contracts. And there's really no other way to describe it than to say it's a Ponzi scheme.
Yep.
And another thing that's very interesting is that, off the top of my head, the price of gold is up in the last few months, what, 140 bucks or something. And
Yep.
I was looking at these numbers yesterday, and I can't remember them. But at any rate, India has been buying an enormous amount of gold, and throughout their seasonal buying period, they've been buying. I mean, their buying has snapped back to levels that, when they've been historically been the largest buyer of gold in the world before China took over that crown. But usually, like $100 move higher in the price of gold will choke off Indian demand for a while until they get used to the price. And the Indians are extremely price sensitive, especially given the fact that the import duty is 12.5% over there. So you got to add another 12.5% to the price that they're paying when you consider what they're paying for gold. So when the price moves up $100, you normally would choke off demand temporarily. They've been buying a steady amount of gold throughout the price rise, and that's another interesting. I find that interesting because we haven't seen that with India, at least as long as I've been following their buying patterns, which is over 15 years. So I have to believe that, they don't keep their gold in London vaults, right? They want their gold, they want it in their hands, and a lot of it gets made into jewelry. That's how they show off their wealth or show off their family status. So I have to believe that whatever tightness is growing in the LBMA bullion market, I have to believe India's buying right now is exacerbating the problem. So
Yep.
a lot of people in the market are looking for, whenever the open interest gets at a crazy level on the COMEX. Well, historically, a crazy level was 500,000 contracts, so everyone's fearful of a big sell-off in the market. But like last night, early on in evening trading, gold was down $7-8. It was down $8 when I went to bed, and I wake up and it's flat, and I think now it's probably up $3 or $4. So again, it's every time they try to take the price of gold down, someone's coming into buying it, and that would probably be one last piece of evidence that the physical market is driving this, and that there's a growing shortage of physical supply to deliver right now.
Yeah, and it looks like we've been seeing similar. I have the COT chart up here. Looks like in silver got blown out pretty good. I see 70,000 shorts 2 weeks ago, went up to looks like 96,000 that the banks are short. So would you say similar picture with silver?
Silver's always been way out of whack. It's in terms of the net commercial short and the total open interest versus the amount of silver that's held on the COMEX. I don't even really study the silver numbers on the COMEX anymore because I think they're just so ridiculous. And it honestly, at this point, we're still at the point in this bull cycle where gold's going to lead. Gold's going to lead silver and the mining stocks. So silver will get interesting later on as this bull cycle starts to move higher. I think when we see silver move over $20, I think that's when you could start to see a lot of short covering. I mean, let's not forget there's been a lot of OTC silver derivatives that have been underwritten and are sitting on bank balance sheets at much lower prices of silver than we've seen over the last 6 months. So silver, I mean, it's going to go. I mean, to the extent that gold moves higher, which I believe it will, silver will move higher times 5 or 6.
Yep. In agreement on that. And perhaps last question for you today, sir. I hear people talk about their gold targets. We might hit 1,700 or 1,800. Certainly interesting when you even think about 1,800. We're getting within range of that all-time high. Although, if we're really on the verge and should that manifest that we hit the point where someone requests physical delivery and the LBMA or the COMEX is exposed as not having the metal, if that happens, are we talking about gold going up a couple $100, or in that scenario, is that when we start to see whether it's $2,500 gold or $3,000 gold? That always seemed to me like that would be a dislocation, not just, oh, we're out $100, but if the fractional reserve nature is fully exposed, do we see a really big move on something like that?
Well, let's be clear about one thing. The scenario that you're describing is already going on to some degree. I mean, that's what exchange for physicals and privately negotiated transactions are on the COMEX. Those are essentially cash settlement to people who if they don't want delivery, they're feigning the desire to have their gold delivered. And I believe, at least I've heard rumors that there's a lot of cash settlement of forwards going on in London right now. So, and that would be the remedy to sort of preempt what you're talking about, which is a default.
Right.
So, and who knows what type of false flag would be sent up. Well, first, let me just say, I mean, the operators of the COMEX and ultimately the U.S. Fed, et cetera, and the people who operate the LBMA, I think they would do whatever necessary to avoid a default, whether that's just the COMEX has a force majeure clause. They can settle contracts in cash under an act of force majeure, and who knows what that would be. But in my opinion, and my strong belief is that these guys would go to any lengths to avoid that scenario, because if that were ever to occur, everything that the gold bug, tinfoil hat conspiracy theorists have been saying about the market and the markets, all of a sudden it would be like, oh my God, everything they've been saying is right. I can't believe this. You know what I mean? I mean, it would be the type of thing that would lead to the collapse of the U.S. economic system and the UK economic system, the Western economic system, because all of a sudden you realize everything we've been told is a complete lie.
Yeah, I know exactly what you mean. I've been sitting here for the last decade thinking about that and trying to see if that is avoidable in any sense. And I fully get it that if something like that happens, that there are things going on in the world. Although there's that, maybe it's just the optimistic part of me that likes to think that there's still, when you have a system based on something honest, in the long term will be better. So it will be darn fascinating to see how that unfolds. And again, I'm grateful for you and all the research you do. And fortunately, people don't have to be overwhelmed or flummoxed by this. There are guys like you that are out explaining this, and perhaps in wrapping up, you can just let folks know about the journals you have and if they're interested in getting some help.
Sure. Maybe I'm the one who needs help. My website's investmentresearchdynamics.com, and I publish the Mining Stock Journal, which is a bi-weekly, and the Short Sellers Journal, which is weekly. And there's links to, if you want more information on either of those newsletters, on my website.
All right. And as always, we will have those in the description below. I'm going to show off my handy Zoom skills for a second here. Hopefully you can see Dave's website. There's the Short Sellers Journal. There's the Mining Stock Journal, which I am grateful that you put out for folks, Dave. So with that said, we'll wrap up this week, and excited to be doing this every week with you this year. I've gotten a lot of great feedback. I know people appreciate hearing from you. So I do sincerely thank you, and we will check in again next week.
Everything you said, likewise, and back at you.
All right, sir. You be well, and I will
You
talk to
too.
you soon.
The land